Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 20th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there, but I'm going to go a little bit further and talk about the option strategies I find to implement into my portfolio on any given day. Also, I have some specific guidelines for you all to follow in order to implement the right option strategy around your given assumption. We have specific outlines for you guys to follow through to find the right strategy to increase those probabilities of success. We aren't just picking option strategies out of a hat here at Pro Trader Strategies. What we're doing is we are finding an assumption and then find the right strategy. So hopefully you guys can follow along with that. So check out some of our webinars and things of that nature to give you a little bit more detail. These daily market commentaries, I kind of breeze over it just a little bit. All right, so without further ado, let's get on with the economic data. Here in the United States, we got housing starts coming in at 1.415 million or 1,415,000 housing starts, beating this expectation or last month's, which was 1.3. Also, building permits coming in higher than expected at 1,553,000, expected to be 1,518,000. Now, we always talk about building permits. They can pull as many permits as they want, but it doesn't mean that they are going to produce the houses. Well, we're seeing that happen, so that is a good sign, a continuation of seeing these housing numbers do very well in an economy that's supposedly not doing very well. But a lot of people looking at single family homes for that social distancing, getting out of maybe the city and moving into their own home to be able to do that. Tomorrow we also have Beige Book. Not a lot of people talk about it, but it is 2 weeks ahead of the FOMC meeting, and this is the one that we're going to get as a release to kind of judge what the Fed is going to be expecting in like the Blue Book, which is what comes out for them right before the meeting. We don't get a chance to see that, but we will see some good information out of the Beige Book. All right, crude oil. I mean, why are we even talking about crude oil? Right there at $40, nothing to see. $41 print, but it's at the point of control. Bonds, let's talk about gold first. Gold moving back up, still about $10 right now away from that all-time high we saw back during the financial crisis. It is a major support and resistance line to keep an eye on. All right, bonds off just by about 19 ticks, not quite a full point. Trending in and around this 174 area, it's getting very comfortable with, and I think that, I've been expecting this to really make a push up into the 177, 178 handle. Just seems like it is a little overdone to the downside and probably an opportunity to get long some bonds, although I haven't really jumped in there. It's just not making big enough moves really in my eyes. All right, the VIX is coming off a little bit today. We're getting a bit of a rebound after yesterday's big sell-off across the board in equities. We've got the Dow Jones up by about 145 points, but as you can see here, it is a blip compared to yesterday's sell-off. A lot of people are clamoring that we are going to have a big correction. At the end of the day, you guys have been watching these daily market commentaries. You guys know I've been saying that it looks like we're going to migrate back down in and around these points of control because that is heading into earnings, and it just seems like the path of least resistance. We're seeing that happen here in the Dow Jones. Probably one of the biggest draggers in the Dow Jones today is IBM, which we'll talk about here in a few minutes. And NASDAQ basically unchanged for the most part. Bit of a correction. I don't think that NASDAQ is going down to its point of control. I think we're going to build out a nice point of control up here at around this 11,240-ish area. I think that's where we're going to see a bit of a consolidation happening throughout this earnings season. It seems like earnings season is already setting us up for failure as some companies coming out with pretty decent earnings and are seeing the day session really weigh on their stock prices. So even though we're seeing some pretty good earnings, we're seeing the markets sell off despite that fact. So E-mini S&Ps up on the day, 15 ticks. Not a whole lot to see here, but is finding some buoyancy here as it's more of probably a sector rotation. I don't think anybody is ready to run for the hills and sell off all their stocks, but more of let's try and find some quality out there that hasn't had the opportunity to rally like some things that we've seen in like the NASDAQ. All right, as you can see, overnight, pretty flat. Yesterday, it was just unabated to the downside, just a pretty bearish day as we didn't see any stimulus package come through. People started worrying about that happening. That is going to be the overarching theme here, you guys, is waiting on this stimulus package. And if we don't get it, we probably could see the markets throw some tantrums here. But E-mini S&P is pretty tight range. All right, now let's talk about Albertsons. These are a couple of things that we were talking about yesterday in the earnings, or for earnings, if you will. Albertsons came out and said that over the internet, basically 260 some odd percent increase. They beat on their headline number, expected like 27, came out with 60. So nice beat there. But you can see as the day progresses, seeing some weakness in Albertsons and not setting up for a nice chart there. That's a pretty bearish signal there, and probably going to continue to bang back and forth between 14 and 15 for the foreseeable future in Albertsons. But what I wanted to talk about here is it's giving a bit of a lift to Kroger, which is something that I have long calls in. Remember in Kroger, I have on the January long the 35 calls in there. So about $1 away from where my long calls are in Kroger, but making a move today. All right, so Procter and Gamble, look at this. I mean, nice start to the day. They beat on earnings as well, but as soon as the market opened, we have seen nothing but selling in Procter and Gamble throughout the day. It's positive, but it is been very bearish to the downside. Having said that, I did cover my Procter and Gamble, which is still quite a bit of ways away from where we currently are anyway. So everything worked out nicely. You can see we got the volatility coming out, which helps out in this type of trade quite a bit. We're looking for that volatility crush, or that volatility coming out of these trades, almost more so than we're worried about our directional move. And as you can see here, we've gotten that downward move in implied volatility over here. That's implied volatility. You can see as that volatility comes out, even if it's like 3 or 4 percentage points, you know, that ends up being about 30 cents out of a trade like this, which is exactly what we're looking for. Yes, I am seeing the market come off, but I covered this right off the open, as I cover in my earnings trades courses. So if you're doing earnings trades, make sure you're following those rules, because like I did in the shorter duration, went into those October weeklies that are going to expire on Friday and sold the 138 puts in there for originally 50, it was originally 60 cents, I believe. It was right around 60 cents, and I was able to cover those for 7. I'm not really seeing where it is because it came off. But just know that I did cover those right off the bat. Let me just double check here on the Procter and Gamble to make sure it's 63 cents. I sold those October for 63 cents, bought them back for 7. That was a nice win for that trade. And then if we go over to the last earnings trade that I did was IBM. Now, IBM, I tweeted out this morning, I hope there's one day where I can keep myself from selling puts in IBM for earnings, because it seems like the Wall Street hates IBM's earnings. They came out, they beat the street on their earnings. So you can see as soon as the earnings was released, the market actually rallied, or didn't really sell off too bad. Consolidated. It was a little bit bearish, but it was because of their whole cloud infrastructure. That's where they're making their money, and that's where I talked about. That is a high margin environment for IBM. Well, what happened over the earnings call, which happened right here? They just started talking about how they have all these headwinds and everything else, and nothing looks rosy at all. And literally, the street hated it. And as you can see, we traded down to 1707. Having said that, I was not able to get strike location outside of that area. I actually was in the October, sold the 120 puts in there for, what was it, 57 cents. All right, my break even, I sold those October weeklies. What were they? The October that expire on the 23rd. So the October weeklies, that expire on the 23rd, I sold the 120 puts. Sold the 120 puts for 57 cents. So my break even on this trade is going to be 119.43. All right. So that's my break even. It looks like that's where I'm getting long IBM on this. Now, I did go in and look at selling some calls, but I'm going to wait it out because I got a couple of days for these to expire. But I'm going to be getting long IBM. We're going to go through the process, the mechanical process we do on a daily basis here at Pro Trader Strategies in order to lower our cost basis on this trade, wait for a bit of a bounce, and get back into profitability. This is a good company. It is a blue chip stock. Buying this at these levels is or has proven to be a good level. Now, if we start really breaking down below my Fibonacci here, then I'm going to probably pull the ripcord on it. But you can see we've tested it several times and bounced up and away from it. That's at the 116.74 area. We noticed that the low today was 117 handle. That's where it was really defended. So I do expect this market to migrate back up to the point of control. They did beat on earnings. Yes, their forward guidance was, their earnings call fell flat. They don't do a very good job of that ever anyway. But I'm going to stay with this trade. If Friday I have to take this stock, somebody puts it to me, meaning I put that stock at 120, then I'm going to continue to lower my overall cost basis, selling some calls against it. I did also look at selling the 114 calls, but I'm going to stay away from that. Wait for today's market action to see how this market really reacts. I'm not going to start throwing good money at bad money, being in the money and trying to dollar cost average this if the market really starts selling off in IBM. So I'm going to hold off at least for today to start lowering overall cost basis on this trade, which I'm long, like I said, at 119.43 synthetically. 120 is probably where it's going to get stuck to me. But remember, we get to keep those credits. That lowers our overall break even. All right, and that's it. That's all I've done. Keep in mind, though, this afternoon we have Netflix, Texas Instruments, Snap, and then in the morning, Biogen. So I'm going to probably be playing Netflix to the upside is where I'm feeling on this one, because I think I'm going to be able to get down here at least in and around the point of control on this trade for this move. You can see we have high implied volatility. Yes, it's starting to come out just a little bit, but we can see that the volatility crush is where I'm talking about here with IBM. And you can see that was up in the 80s, and then a day after down in the 60s. So that's 20 percentage points in a trade like this. And if I go over and look at what Netflix is going to see in regards to just that volatility crush coming out of this trade, the volatility on this area, let's just kind of take a look at a trade real quick here. If I could, probably should have had this up before I started talking about it, but hey, we're shooting from the hip here. Probably looking at the 475s. The Vega on that is 11, so I get 20% or 20 percentage points coming out of that. That's $2. The strikes are trading right around $3 and change. So just that volatility crush alone will help me out on something that's only about a 13 delta. So I would have to have a massive move down to not make up for that volatility crush we would see normally coming out of a trade like this. So even if it's 10 points, that's $1. The theta decay and everything else, the theta decay on this is $1 as well. So that's why we set these trades up, in order to increase our probabilities of success like that. We get into that thief in the night, leaving the door open for him, getting that volatility crushed, that creates a good scenario for success. All right, that's all I got for you guys. Check out the webinar this week. We're doing the roadmap to trading options. It's not earnings specific, so if you want to check out the earnings specific ones, go to protraderstrategies.com and check those out. Also, sign up for the webinar that we're doing on Thursday. All right, so that's all I got for you guys. Hope you have a good one. And if you can't take that, take it easy.